or no bearish? I thought it was an easier question than that. The answer is no. Okay, so for those that don't know, you'd suggest that this bottom edge is massively bullish, right? Massively bullish. Why massively bullish? Well, because we've got the ability with our eyes to see that it's massively bullish, right? So there's the low, there's the cash open there in terms of the price of volatility, and obviously, you know, we would have to rescale the chart off the bottom of the chart, wouldn't we? We'd have had to rescale the chart all the way down to the bottom of the chart to recognize just how bullish this was at the bottom edge, right? Crazy bullish. And obviously, if it was crazy bullish, you've had 1, 2, 3, possibly, definitely 4, 5 trade opportunities. 3 of those trade opportunities, 3 out of 5 of those trade opportunities have all gone for $2,000 or more. Believe that or not. 3 out of 5 of your trade opportunities have gone for $2,000 or more. Think about that. That's a $6,000 day with just that buy, and this buy here. A $6,000 day. And if you're a 5-lot trader, that's you done 30 grand today. 30 grand on a 5-lot. Well, the small ones, because of the volatility we've got, Melvin, the small trades are they're $1,000 a piece, you know, when you get a small trade on. So this trade was 1,000. This trade, this other trade here was 1,000. So that's $2,000, $4,000, $6,000, $7,000, $8,000. 5 contracts today. You're looking at somewhere in excess of about $40,000 for your day's swing trading on this. Now, you're not going to get that. We've talked about this already today. We've talked about the 3-lot swing, but you know, 40 grand is sensational. If you've been able to play into any one of those 3, you've made your days, possibly your week's profit, guys. We're just touching into target price, a good location to book some of your monies. So coming into target price, great location to book some of your money there at 160. Buy side off the 060s, 160, $2,000. Grab some of that cash, guys. Stunning. Absolutely bloody stunning. What a great bit of business. What a beautiful piece of business right there. Looking at risk premiums and inflation, I think risk premiums inflation seems to be almost the same line today as our volatility pricing. And that's because the volatility guys use things like risk premium and inflation to price up the price of volatility, don't they? So these 2 lines should be in agreement. When they don't agree, you've got something you need to consider. So when they didn't agree in here, for example, you just had to give it a bit of space. That's why you use 2 lines or 3 lines and not just 1 line. If you just used 1 line, you might have seen this as a spring trade. You know, for example, here, if we just used the volatilities, you might have used this as a spring trade and bought there and then got absolutely annihilated and the press away from that price. Using 2 lines allows me to start recognizing that I can buy these low prices with confidence with that value changing. And obviously I can now take advantage of that change to take advantage of a trade. Now, some people might have said, why did you take profits here when the value was incredibly bullish? Well, if you add in your second line, so the value looks incredibly bullish, why take profits? We should easily take out the top edge because we've got a second line that wasn't quite as bullish, didn't we? We had a second line that actually had started to come off quite hard and quite fast, allowing me to then say, I don't think we're going to get the top line. I'm going to take my profits at 160. I'm going to lock in my $2,000 profit. Thank you very much. Hence the reason why you use a little bit more detail to make a little bit more sensible decisions. Beautiful days trading, guys. Absolutely stunning if you've got those trades.